Good day. Welcome to another episode of Analyst Insights, your plug for everything economics, finance, and investments. I'm your host, Rufaro, and I'm joined by my colleague, Ranga. Ranga, we've had an interesting week with Old Mutual's results. It's listed on the smaller exchange called FinTech, and a lot of people might not be alive to this, but it's one of the biggest companies in the country and one of the biggest listed public companies. What did you make of their numbers?
Thanks, Rufaro, and good day to our viewers. So I think the major highlight from the all mutual numbers, from what I saw, is the fact that there has been some growth in the US dollar business. So be it from the insurance side, the premiums in US dollar terms were increasing. Also from their bank, that is from CAPS, you find that right now the loans they actually split halfway between local currency and US dollar loans, and they're saying they're actually extending these loans mostly to exporting businesses that are generating foreign currency. And I think even also from the property side, the occupancies and the collections are also looking fairly stable. And what this is telling you is actually the US dollar economy is actually growing. It's actually a big thing that maybe it's happening behind the radar, and maybe it may not be getting so much coverage and attention. But the US dollar businesses are actually growing over time, and it's more sort of mirrors what you are seeing even the manufacturing kind of businesses. We saw that with the likes of Delta when they last reported, and also even your retail like okay. So we are getting to a point where for most businesses, they've actually breached the 50% threshold in terms of their foreign currency revenue, and it is good for the country in the sense that that foreign currency revenue will certainly pay taxes in foreign currency. And in a way, it sort of explains part of what you're seeing maybe on the auction, and the increase in the allocation, and also the recent development where the Bureau de Changes have been instructed to start giving out $50 a week to individuals who just have to present their identification documents. So it's I would say that's sort of the highlight. It's the biggest, one of the biggest companies, certainly the biggest fund manager in town. I think they control more than 50% of funds under management. So whatever is happening to them obviously will attract a lot of interest from the analysts. Unfortunately, they are listed on a less active exchange, and they don't seem to get as much visibility as you'd expect for such a big company.
So if you think about the two exchanges that we have, excluding, the two exchanges in Harare, the Zimbabwe Stock Exchange and FinTech, I think that from a technological standpoint, FinTech is definitely much more advanced than the ZSE. You can buy and sell shares on the same day, which is not possible on the ZSE. And their platform seems to be much more innovative. But we don't see a lot of volume in Old Mutual Zimbabwe. And I think, historically that was because we had an indigenization regime in which if you wanted to buy shares in Old Mutual Zimbabwe Limited, you had to demonstrate first that you were indigenization compliant, get this compliance out of the way before you could buy. But obviously, post 2017, we've seen these rules around indigenization fall away. So why do you think that for a business that is that big, that is doing so well, we're not seeing the kind of volume that you'd see for a similarly sized company on the ZSE?
I think it boils down to maybe lack of proper promotion, if I could put it that way. Even that fact that you're just highlighting that post 2017, with the indigenization regulations falling away, all mutual Zimbabwe became available to all and sundry. I don't think there are so many people who know about it. And also, I don't think there's been enough work that has been done to try and promote it, even amongst fund managers and other institutions, to try and explain that now they are able to be to trade, because it's actually a very interesting business, very interesting investment proposition. So it boils down to the promotion or the marketing aspect, both from the Old Mutual end, but also most importantly at the exchange where they are listed. There's no reason why we are not seeing huge traffic on that exchange. I mean, just look at their ETF, exchange traded fund, the top 10, which they listed on the ZSE. It's actually fairly newer compared to the listing of Old Mutual Zimbabwe on FinSec. But there's quite some activity there, because it's listed on an exchange that is already known. So I think the team that's running FinSec and the team at Old Mutual may need to do more to try and put the word out there about the exchange, but also the Old Mutual which is listed. Because when most people think about Old Mutual, they're thinking of Old Mutual that was suspended. So the whole story about suspension, it comes across as if it's affecting the local business as well. But yet we know that the local business is still trading. And even in terms of the coverages by analysts, coverages by brokerage firms and also asset managers, there's very little. Sometimes you even the average investment professional would not even know what the price for all mutual Zimbabwe will be on a day-to-day basis. So I think that feasibility is actually needed, and I believe it can be driven from the exchange where it's listed, but also from All Mutual Zimbabwe itself.
Okay, speaking of potential new listings and new developments in the capital markets, this week POSB reported their results, which I thought were quite good. I think it's one of the state-owned banking institutions that has consistently done well, and I think it's in the process of being privatized and listed. What do you make of POSB as a business and its prospects to join our capital markets?
Look, it's an attractive business if you look at it that way. When you look at the profile of its customer and the numbers that they have, and the fact that they've got a proper national reach, they are represented whether through branches or through agencies. So and besides that, the way I also look at it is it could actually be used as a way to push financial inclusion. One from the banking side, which is what they're already doing, but also in terms of participation on the market. So these are they are interacting with the sort of the average man on the street, if I could put it that way, and it can be a channel where you can be pushing some investment products to all these people. Back in the day, they used to be very popular with their different savings options. I remember the days of the green card, the green book, and the red book, which were were quite popular with people, and I don't see why, given its reach, it can be used to try and attract more people into more saving and investment products. So I think, and also when you look at the focus that is there in terms of SME banking, I think in as much as it has got a higher license than the SME or microfinance banks, I think it's actually better placed to be a leading micro lender and also a leading take out deposits at micro level. So which is good. We get stories about this privatization. One certainly hopes that maybe it moves with pace and we see something happening. Because I think when this whole issue started, it was being spoken of together with the likes of Net One and Tel One, but it looks like there's been some progress, on PSB, more progress there than with other entities.
So we've come to the end of August, and one of the things that's quite clear is that we've seen significantly less turnover on the ZSE in August than we did in July. Would you like to speak to why that is the case and what your outlook is for September?
So August actually was the first month this year that the market has recorded negative growth. So as you would know, I think from January all the way to July, the market was quite buoyant. There was a lot of activity, and then there was a slowdown. I think part of that could be just market correcting, taking a breather, profit taking setting in, but also there have been a number of developments that were really are creating some sort of uncertainty on the market. I think chief amongst them, when you talk to, say, fund managers, is this whole issue about the special drawing rights, the impact on the economy, and what it means for the listed companies. And look, there are people who believe that the SDRs are going to inject massive US dollar liquidity. Obviously, we know that's not going to be the case, but people are bound to make decisions on the back of such a significant development on the market. And going forward, what does it mean? I think it depends on the impact of that SDR, but also other developments on the foreign exchange market. I think from the MPC, one thing that also came out besides the $50 weekly allocation to individual has been the revelation that the foreign currency receipts have actually been increasing. And it dovetails with what we've just discussed, that most businesses are seeing growing revenue on the forex side. So if that pans out well, then it also have impact on the market, because it means some of these companies that are invested, that are listed on the ZSE, will continue to see increasing US dollar revenue and also profitability. And who knows, it might get to a point where they will start paying US dollar dividends as well. I really am not expecting the market to push harder, even towards December. Market cap at 5.5 billion. Maybe given this momentum that you have, maybe you're looking at ending the year around 6 billion. But there's still room that it could actually retrace backwards again to the $5 billion level. But generally, there's optimism even in terms of the corporate performance, the expectation on corporate performance, and the recent news that we might have another normal to above normal rainfall season could actually add to that optimism, because of the importance of agriculture in our economy.
Should we be excited and optimistic by these forecasts for a better rainy season and their impact on the agricultural production, given that the forecast made on the basis of the current season's rainfall has been so far off the mark? Should we not be a bit more conservative in projecting, our production in the coming season?
So I generally, policymakers are not in the business of being conservative, because there's also some politics behind that, isn't it? And I think maybe the way they look at it is, even if the numbers are way off the mark, as long as there's no hunger and starvation, they don't have to be importing for the purposes of feeding the masses. That accounts as some progress. But for business people, for you and me, people who are looking at the numbers, and try to make sense of what's happening around us vis-a-vis the expected economic growth, surely just tells you that numbers that expect growth that is only driven by natural phenomenon like rainfall is not something that you can really make some noise on. It also reflects how far we have gone in terms of us not being able to invest properly in irrigation. Rains are good, but we can't run a whole economy just based on rain-fed agriculture. You want a scenario where you've got the dams. We've got dams, so many dams, but we just don't have enough irrigation infrastructure for us to be able to do our farming, even when we don't receive adequate rainfall, as long as we've got enough water in our dams. So that's but I totally agree with you that maybe the expectation now is maybe based on what has transpired so far. If there was some exaggerated optimism in the previous year, maybe this is time to
Be a bit more conservative.
be more conservative, yes, and plan accordingly.
Yeah, thank you so much for that, Ranga. I'm afraid that's all we have time for. Thank you so much for tuning in. Please like us on Facebook and follow us on Twitter. As always, we welcome your comments and suggestions and thoughts. Cheers.